Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday, the 23rd of June 2021. And we're looking at a positive economic report published by Reuters today, highlighting that Eurozone business growth is at a 15-year high, as demand is unleashed. Now, before we look at that, just a quick shout out to 3 videos we wish to draw your attention to. The first, published just a couple of hours ago, morning gold and silver update, dollar weakens, gold and silver prices rise. And yesterday, Hedge Fund that bet against GameStop shuts down, lessons for investors. And the third, published on Sunday, why dollar strength and lower gold and silver prices may be a short-term phenomenon. And what's interesting, and we mentioned this in this video, that the UK is more likely to cut back on its tapering program of its QE. First, because its apparent growth is going to exceed that of the United States and Europe. Then will come the United States, and then lastly, Europe. And that suggests that certainly against sterling, we may find that the dollar will fall, but may hold its own against the euro. So we've placed links to these videos below, and let's now take a look at this Reuters article. Okay, we have an interesting Reuters article today. Headline: Eurozone business growth at 15-year high as demand unleashed, PMI. The time count is 10:42, and as you can see in the top left-hand corner, this was written 30 minutes ago. We'll go through it and discuss it briefly. Eurozone business growth accelerated at its fastest pace in 15 years in June, as the easing of lockdown measures unleashed pent-up demand and drove a boom in the dominant services sector, but also led to soaring price pressures, a survey found. When the coronavirus was spreading rapidly, governments imposed strict restrictions, encouraging citizens to stay at home and forcing much of the service industry to close. But after a slow start, the region's vaccination drive is picking up pace, and the burden on health services has eased, allowing some restrictions placed on service firms, which were already adapting to new operating conditions, to be lifted. That led to a jump in IHS Market Flash Composite Purchasing Managers Index, seen as a good guide to economic health, to 59.2 from 57.1, its highest reading since June 2006. It was ahead of the 50 mark, separating growth from contraction, and a Reuters poll estimate for 58.8. Accelerated vaccine rollouts and falling case numbers are allowing restrictions to be eased and consumers to feel more confident, said Willem Sells, Chief Investment Officer, Private Banking and Wealth Management at HSBC. Services and consumption in particular are seeing strong momentum and are now the number one engine of European economic growth. Now, we mentioned earlier in a video we published on Wednesday morning update that the US will be announcing its flash manufacturing PMIs, market manufacturing PMIs. So it'll be interesting to see what they come up with. We're talking services here. A flash services PMI bounced to 58 from 55.2, its highest since January 2018, and above the 57.8 Reuters poll prediction, suggesting that momentum would continue. The new business index climbed to a near 14-year high of 57.7 from 56.6. Lots of numbers here. The latest easing of restrictions in Germany and France, the bloc's 2 biggest economies and the only ones to report flash PMIs, led to a boom in services there as well. In Britain, outside the Eurozone and the European Union, growth in the private sector cooled only slightly from an all-time high in May, when more coronavirus restrictions were lifted. Now, this is the part that affects all countries currently. Pricing pressures. The expansion in Eurozone manufacturing activity, meanwhile, matched May's blistering record pace, with a June flash PMI estimate holding steady from May's final reading 63.1, confounding the Reuters poll estimate for a dip to 62.1. An index measuring output which feeds into the composite PMI nudged up to 62.4 from 62.2. Here we go, more numbers, hopefully the last. But supply-side disruptions and huge demand have made it a seller's market for the raw materials factories need. The manufacturing input prices index rose to 88 from 87.1, the highest since the survey began in June 1997. So does that mean these terrible traders are taking advantage? Let's wait and see. Inflation pressures continue to mount as input prices soared in June, said Bert Colleen at ING. The problem with these surveys is that they measure the number of businesses that indicate higher prices, not the extent of it. In this reopening phase, that might overstate expectations of the pace of inflation. And this is why Fed Chair Jerome Powell stated that the 5% annualized rate announced just week before last, in fact, is only a temporary blip because, of course, you have almost a false economic picture because we're just reopening out the economy. Supplies on certain goods are short while everyone's been in lockdown, thereby increasing the price, and the US then estimating that that will fall back somewhere in the region of 3.5%, and then eventually, in time, work its way down to 2%. Whether we'll see that, we'll wait and see. Much then depends on the monetary theory it adopts and the level of interest rates that are raised and how soon the tapering takes place on their bond buying programs. The European Central Bank is likely to look through those inflationary pressures and will keep monetary policy loose this year to offer support to the economy, a Reuters poll found earlier this month. Amid hopes the worst of the pandemic is behind the block, overall optimism rose to its highest since IHS Markit began collecting the data in July 2012. The composite future output index rose to 71.6 from 70.6. Now, as we mentioned in this morning's video, we highlighted the fact that the UK already experiencing considerable growth and far greater growth this year they envisage than both the United States and Europe, are likely to taper sooner their bond buying programs or QE activities, which then will be followed ultimately by the Fed and then by Europe, which is technically in a worse place, although as this report shows, things do appear to be improving. What does this all mean? Well, it might send further jitters, certainly in the American market, that rates or tapering in the short term may occur sooner than expected. But rest assured, policymakers are not going to take the same risk that they took a number of years ago and quell any increase in economic activity, thereby allowing inflation perhaps to run away a little, arguing that it is only temporary. But it's nice to see that the global economy is starting to pick up. Of course, any increase in COVID or any of its deviants, or shall we say, is deviant the right word? Derivation? Deviant? Yes, perhaps. Such as Delta. If that picks up, then of course the economy will suffer again. And we should start to see as a result an increase in the price of silver as markets increase their demand for all the goods that we put silver into. And there are a lot, but we're not going to cover that in this video. Thank you so much for listening. Please give us a thumbs up, share, like, subscribe, press the bell sign and comment. Thank you for listening. We hope this brief update at least gives us a little perspective that in Europe as well as the UK and the United States, the economies appear at least to be improving. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.